Cheryl Razzo with ElderWorks, Senior Strategy and Specialist. And as you know, at ElderWorks, we're here to really help all of you. We help seniors, families, as well as professionals, really finding any kind of services that you need at all. We don't charge for our services. We are non-for-profit. And as you can see from today's venue, we have wonderful partnerships with so many people that really are helpful in helping us bring all the information to you. We have our directories also that we published, which are out on the table, and you're welcome to take those. So please do. All the services that we know of in the state of Illinois for seniors. So today we are very fortunate and privileged to have with us Megan Forristall. And Megan is a specialist with Social Security Administration, has been with them for 18 years, and has a booth here. What booth number are you, Megan?
I think it's 307.
I think you are 307 on that back area. So feel free to stop by. Obviously, all the resource booths will be open until 2:30 this afternoon. So Megan, thank you for joining us, and please go right ahead. Carol.
All right, thank you everyone for coming. As Carol mentioned, I'm a public affairs specialist, and I'm actually based in Peru, Illinois, but I cover 17 offices in northern and north central Illinois. If you're not familiar with Peru, if you've heard of Starved Rock State Park, we are right by there, so about 10 minutes from there. And today we're going to go through just a good general overview of our programs with Social Security and talk about our online services as well. And then when we get to the end, we can go through any questions you might have. Well, hopefully I can answer them all. 18 years and something still surprises me sometimes. So just to start with the basics on Social Security, most of us are probably familiar with this, but some people, when if you have a teenager in your life and they get their first paycheck, they might have been a little shocked to find out what their $15 an hour or $9 an hour, whatever it was, they thought they were going to get actually ended up being after they had their FICA taxes come out. So FICA taxes is what you're working and paying into and funding the Social Security program with. The total FICA tax is 15.3%, but we as employees, we pay half of that. So 6.2% is for the Social Security program and 1.45% is for Medicare. And then about 182 million workers pay into Social Security. We're paying into last year 94% of the workforce. So in Illinois, we do have a lot of groups that do not pay into Social Security. That includes our public school teachers, certain state employees, state university retirement system. But overall in the United States, the general majority of people do work and pay into Social Security with their jobs. Now, a lot of people are thinking about retirement when they think about Social Security, but we're actually going to talk about something else first. We're going to talk about our disability programs. So, disability, our definition of disability at Social Security is completely different than any other organization's definition of disability. And our definition is whether you can work and make substantial work. So that is a dollar figure every year. If you see the news about cost of living increases in the fall, anytime there's a cost of living increase, these figures go up. So I do want to say everything today is current for 2023. Next year's figures we talk about in this presentation might be different. But this is, as of this year in 2023, substantial work is considered for somebody who is not blind or visually impaired, the ability to work and make $1,470 gross a month. So of course that's kind of a low amount. Now people aren't really necessarily able to make a living on that figure, but that is our definition of a disability. The second part is whether that condition is going to last at least 12 months or it's like a terminal illness expected to end in death. So it's a long-term disability program. We don't have a short-term program for somebody who may be out 8 weeks or something like that. It is a long-term disability program. Now, for adults under that umbrella of disability, we have 2 different programs we screen eligibility for. The first is Social Security disability. So when you work and pay those FICA taxes, you're not only paying in for your retirement, you're also paying in should something unexpected happen. You have to go off of work earlier than planned due to a disabling condition. So Social Security disability, again, you're working and paying into that program. You can actually file for Social Security disability up if you're found disabled prior to your full retirement age. So maybe you or someone you know, they're 62, and they're like, well, I have to go off on retirement because I can't work anymore. If they're actually stopping due to a medical or some sort of condition preventing that work, they want to look into disability. And actually between 62 and full retirement age, you can file for both disability and retirement at the same time. The reason someone might do that is the disability decision does take several months, so you have that retirement income while you're waiting. But that is something just to think about. Even if you think, well, I'm at retirement age and I don't have anything to do with disability, it's actually up until full retirement that you can look into that. Now, our other program based on a disability is called Supplemental Security Income, or SSI for short. This is a needs-based program, so someone has to have limited income and resources for this program. This is for adults with disabilities, also children with disabilities, and anyone 65 years of age or older that meets the income and resource guidelines. Once you're 65, for this program, we no longer need that medical decision. It's called an ages benefit. So just to break down again the differences between these two programs that you can get based on a disability. Social Security disability, it's coming from that Social Security trust fund. We current workers are paying into that trust fund, and then we look forward to drawing that money back out at retirement. But if it's sooner than that due to a medical condition, you can look at the disability. It's based on the Social Security amount of taxes that you paid into the system, what your benefit amount will be. And this benefit is payable for Social Security disability no matter how much money you have in the bank, no matter how many vehicles you have. It does not have any requirements based on need. It's just based on the money you paid in and your medical decision. And then on the other hand, that supplemental security income, it's coming from a completely separate pool of money. It's coming from a general treasury fund, not the Social Security trust fund. And this is for, again, individuals with limited income and resources. So you have to meet this criteria for the needs-based program, and then have that medical definition. And again, children and adults can qualify based on medical conditions for that program. So that's just a real quick synopsis on disability. We do have a lot of additional information on Social Security disability and SSI on our SSA.gov website. But of course, what people really are primarily thinking about when they think Social Security is that retirement party we're all looking forward to, right? Yeah. Maybe some of you have already had your retirement party too. So retirement, you're working and you're paying into that Social Security system and you're earning credits. To get a retirement benefit, you just need 40 credits overall. So we talked about disability. Again, you're earning credits for that program, but there's a different criteria of how many credits you need when you're younger. For retirement, it does not matter when you've earned them. You just need 40 total. Once you hit 40, we stop counting them. So there's no competition with you and your friend over how many credits you have, okay? You get to 40, we stop counting them. So some people might have those 40 credits within 10 years of work. I remember back when we used to send out those paper statements every year. I think I was like 25 or 26 when I got my first one. And I already had my 40 credits. So great, I can stop working, right? Well, of course, my retirement benefit based on my years of detasseling and working summer jobs wasn't going to be very good. So I still had to keep working. But I had my minimum amount of credits, so it gave me a retirement estimate. This year in 2023, you need $1,640 to earn 1 credit. So if someone has $1,630, 0 credits. It doesn't go toward anything. You get max of 4 a year, and so that's where they get the 10 years of work where a lot of us can get those in. But maybe if you are someone who does not pay into Social Security regularly, or a teacher or something, but you work a summer job because you need to supplement, or you just enjoy working in the summer, Then, so you have your Social Security credits and your non-Social Security credits. Maybe you only get 2 credits in the summer. As long as you get to 40 in your lifetime, you'll get a retirement benefit.
What constitutes earnings?
That's a good question. So this is wages or net earnings from self-employment is what we're talking about here. So that you filed taxes on. So, of course, a lot of us are paying more than that minimum we need to get to those 40 credits, and that's all going into determining our benefit amount. So the first thing we're going to do is we're going to take your wages and we're going to adjust them for inflation. So you might be really surprised when we do that. People come and they'll say, well, why wasn't this a higher earnings year? Well, because when we indexed 1990s, that was actually more than what it is for this current year. So we're going to do that. We're going to take your wages, we're going to adjust them for inflation, and then we're going to find the monthly average of your 35 highest years of earnings. I would say that this is a common unknown factor of this. I hear a lot of people that say, oh, I can't stop working at 55 because you look at my last 5 years, or, oh man, I had a few years off and that's going to really ruin my Social Security. No, we're 35 highest years. So some people might have some 0 years in there, but it's the 35 highest years in your lifetime. And we always look at the high 35. So if you keep working after you draw a Social Security benefit and you replace a lower earnings year, we're going to kick that out and put the new higher one in. Then from there, we're going to get your average index monthly earnings. And we apply a formula to that. Now, if you are a math person, I am not a math person. If you are a math person, we have this fun little tool online where you can index all the years and you can manually calculate your benefit. So if that is your idea of a good time, go check that out, okay? If not, I'm going to show you where you get your online account and it just tells you what your benefit estimate is. That's the way I choose to do it. I heard a lot even today. When should I take my retirement benefit? What's the best age to take my retirement benefit? My friend did this. My spouse did this. What should I do? I don't know, okay? I don't know what you should do. Because I'm not living in your life, in your household. What I can tell you is at Social Security, we can tell you month to month what your benefit will be. Every single month from 62 all the way up till 70. Because 62 is that early retirement age still. Everyone can still draw at that early age. What's gone up is the full retirement age. So you see in this example, this person's full retirement age is 67. And then between your full retirement age and age 70, you earn what we call delayed retirement credits. Those average about 8% per year. So everyone's situation is different. Some people might say, I'm going to go ahead and take it at 62, and somebody else would say, what are you, crazy? You're going to lose out on over $1,000 a month than if you waited till 70. But think about it, they're also getting 8 more years of benefit checks than they would if they waited till that maxed out. So sometimes you might hear, well, everyone in my family lives to be 90 or 100. So people say, well, I'm going to bet on that and I'm going to wait. And somebody else might say, you know what, things aren't always working out that well in my family tree, so I'm going to take it at 62 and just start enjoying my money, right? Yeah. And there's neither of those answers are wrong. So what your friend does or your sibling or whoever, that does not determine how you make your decision. You have to make it based on what's best for your financial situation. So full retirement age, like I said, it's been going up. So you can find your full retirement age here. My full retirement age, amongst many other people now, is 67. Everyone born after 1960 or later, that's our full retirement age. So right now we're kind of wrapping up the time period. We're in between like 66 and 8 months, 66 and 10 months. Pretty soon it'll get a lot easier for everyone at Social Security working here to remember, because we'll just say 67 is your full retirement age, but we're kind of in that middle between time here still. If I should go ahead and take it at 67 or 62 or 67, I'm going to have a 30% reduction onto my monthly benefit. Okay, I'll just have to figure out if I can afford that, right? You know, go take my vacations, travel, or maybe if I'm really having fun working, I'll say I'm going to put it off for a little while longer. Again, that's just going to be a very individual decision for you. One thing I can tell you, is if you are still working while you're under your full retirement age, that is a factor you need to consider when deciding if you want to draw yet, because we do have earnings limits. So again, same answer as before. What we're looking at for this is your wages and your net earnings from self-employment. This does not include a retirement benefit, unemployment, things like that. This is your work limits for 2023. This year, if you're under the year, you turn your full retirement age, your monthly earnings limit, or your yearly earnings limit is $21,240. So if you are working all year and making 80 grand this year, and you're under your full retirement age, you're probably going to say, I'm going to hold off. Because what happens is, anything over that $21,240, we look at half. So we might be holding about $30,000 in Social Security checks before we would pay you anything. That doesn't necessarily make any sense. Now, let's say you're making $4,000 over that limit. So we have to hold $2,000 in benefit checks, and you get $2,000 a month. You might say, well, that's okay. You're only holding one in work suspense, and I get all the rest for the rest of the year. And then what happens is, when you hit your full retirement age, we'll recalculate your benefit. And we'll say, oh, we held one check in work suspense, so almost like you took it a month later. We're going to get rid of one age-related reduction. So that's a consideration. If you're only going to have a few checks held, you might go ahead and file. If we're going to have to hold all your checks, it's probably not going to be a reason to file yet. But you see that there's a monthly limit on there too. So let's say you are making $80,000 this year, but you're making it, you started, with January, and here we are, and you're kind of like, I'm done with this job. And so you stopped at the end of July. You said, I'm just ready to be on retirement, right? It does not matter how much you made between January and July. You can start your checks in August, paid in September, even though you're way over that earnings limit, as long as you're under $1,770 a month for every single month for the rest of the year. So starting with August, you're under that monthly test. So this is an option that allows people to start their checks during the year who have been working full time but are ready to stop during the year. So that's something available to you. Now, yes?
Whose responsibility is to do all this reporting? Oh, I stopped work, I did this. I mean, how?
Well, we ask about work in your application. So we're going to start there. And then we'll tell you, we're going to assume that it is whatever you told us, unless you call to report the change. So after, it is your responsibility to let us know if something changes. So that's your reporting response, part of your reporting responsibilities, and you'll have them in your application, is letting us know that. The year, oh yeah, sorry.
Just a quick question. When you say about the full retirement age, are you talking about like the 67 and 7 months or whatever, not 65? You're talking about
So full retirement age, so at height at 67, for everyone particular. Yeah. Now you see the year you turn your full retirement age, so let's say your full retirement age is 67, and you are turning 67 in September of the year that you are, your birthday is. That year, between January and August, you could make $56,520 this year. By the time you turn 67, that'll probably be higher. So a jump up the year you turn your full retirement age, and we only look at $1 for every 3. And then the first day of the month in which you hit your full retirement age, you can work and make $1 million if you can find that job. And then you get my card and you send me an email and you tell me where to work, okay? So you can work and make as much as you want and still get all those Social Security checks. So that's the full retirement age. I had somebody stop by the table earlier. He said, well, how do I report when I'm working? I said, well, how old are you? And he said, 73. I said, you can work and make as much as you want. And he was really happy about that. I hope I'm not that excited to keep working at 73, but maybe I will be. Maybe it'll be, I do love my job, so hopefully in 30 years I still love it as much. But yeah, don't worry about it. Don't call us. Do your thing once you're at your full retirement age.
Thank you.
Yeah.
So what you're saying then, when you full, let's say it's 67, let's say 67 or whatever, and you're still working, let's say you work until you're 70, you could start taking your Social Security at that 67, whatever, with no penalty or anything, plus your regular income.
Right. Correct. Yep.
But the Social Security, is that taxed? Social Security is taxed?
Social Security is taxed, potentially. What'll happen with Social Security and taxes is we're gonna send you a 1099, and it'll say if this is absolutely your only income, and you're under this limit, you're not likely to have to pay taxes. But a lot of people do. But there are lower income earners that's their only income and they don't have to pay taxes because they're under the threshold. But as far as like how much you can voluntarily have taxes withheld from your Social Security check, but that's something you have to ask for because, like I said, some people don't have to pay any. Some people have a lot going on and want a higher percentage. So that's something you fill a form out. It's an IRS form. You submit it to us, so you can stop, start, or change that percentage at any time. But we can't advise you on how much taxes you're going to have to pay. I do not work for the IRS, so that's a separate compartment there.
Can you do that online, or do you have to go to an office, or do you have to mail in a form? Or?
The form can be found online and then mailed or faxed or dropped off to the office. It's not available quite yet as an option within your My Social Security account. And the reason we're having trouble with that is because it's actually an IRS form, not a Social Security form, so getting that as a kind of part of the system, yeah.
And like any other withholding, if you wind up not, you're now at the end of the year, you're going to file taxes. If you wind up not needing that tax deduction, it will be refunded to you.
That'll
By
all
the
happen
IRS,
through the IRS,
yeah.
yep.
Yeah.
And then you can also say, oh, I think I should lower my percentage ongoing so that doesn't happen next year, and you can take care of that.
Thank you.
Mm-hmm. So, as well as benefits we can pay someone on their own record as a retiree or someone who's disabled, we're also going to screen for benefits for other people on the record. So, just know that we ask these questions in your application. So you don't have to think right now, oh, I have to remember to tell them I have children or I'm married. We're going to ask you these as part of your application process, and then we're going to check for benefit eligibility for these categories. So for children, same rules for children, whether they have a parent on disability, a parent who's passed away, or a parent who's on retirement. A child must be either under 18 or up until 19, a full-time student in high school. So a lot of seniors turn 18 during the school year. They can keep getting the benefit till the end of the school year. We just need a form from the school verifying that they're showing up for school. And then this last category is one to really think about, 18 or older and having a disability prior to age 22. So you might have an adult child who's been disabled their whole life, but they're 35, 40 years old by the time you file your retirement benefit. If they are not married, if they've not been able to work substantially on their own record, they can potentially get a benefit off your record, even though they're well over 22. So they don't have to have been on a disability benefit since before 22. We just have to be able to find medical evidence saying that they've had this disability since before 22. So again, you just list their name down. We'll then have to recontact, go through a disability application with them or with the parent.
So do children include adopted children, or, God forbid, your grandparent and your child passes away or something, and you become, I guess it has to be an adoption, not a legal
Correct.
guardian.
So yes, legally adopted children, yes. Legal guardian, no.
Okay.
So the adoption would need to be in place.
Thank you.
So benefits for a spouse. This is first category, someone you are currently married to is who we're talking about first, okay? Now, if you were born after January 1st of 1954, we have something called deemed filing that says if you have your 40 credits, we have to pay you a benefit off your own record before we can pay you anything off a spouse. If you have your 40 credits, you're deemed to file for any benefit you're eligible for. If you're born prior to that date, you would have the option at full retirement age to take just half spouse's benefit and let your own keep growing till 70. But for everyone else born after that date, that option is no longer available. So let's assume when we're talking about this deemed filing, if you have your own 40 credits, we're going to say, what is 100% of your own benefit first? If 100%, which is your full retirement age rate benefit, is more than 50% of your current spouse's, there's no spousal benefit payable. If it's less, we're going to pay you what we can off your own, and then the difference between 100% of yours and 50% of the spouse's off the spouse's record. So we're not paying you anything we can off your own plus 50% of your spouse's, okay? It's the difference to get you up to that amount. If you're filing early, we're going to apply that age-related reduction to those benefits. So I have some situations sometimes where somebody has started receiving their own benefit, and they took it at 62. When their spouse files, they're now full retirement age. So they think in their head, oh, I'm going up to half of my spouse's benefit. That's not correct, because you're still going to have the age-related reduction in place off your own. And you're going to be getting the difference between 100% of your own and 50% off your spouse's. So it's going to come in at less than 50% total. If you took a benefit early, you're still going to have that, okay? Now, this payment never reduces the benefit of a worker. So anytime we pay anyone else on a record, it's never going to decrease the worker whose benefit we're paying it off of. A spouse you're currently married to, that person also has to be filing or receiving a benefit before you can get anything off their record. And then you need to be 62 for spousal benefits or caring for a child who's under 16 or a disabled child. The other thing, that earnings limit we talked about, that is the same earnings limit that applies to even children, so high schoolers who are working, spouses, and survivors that we're going to talk about. Everyone needs to stay under those limits if under full retirement age or have their checks held. Divorced spouse benefits. So, first thing to say, your divorced spouse can receive a benefit off your record even if you are not filing or receiving the benefit. So if that's the reason you're not drawing a benefit, because you don't want your ex to get off your record, that doesn't work. And I have heard from it before, so I just want to pre-warn you. So to get off a former spouse, we're going to have deemed filing if you're after that date of birth, just like a current spouse. You have to be married at least 10 years, and you cannot be currently remarried to anyone else, and 62 years of age or older. But here's that big difference. Your current spouse has to be filing or receiving for you to get off of their record. The divorced spouse doesn't. They just need to be eligible to receive a benefit, meaning they have their 40 credits and they're 62 years of age or older, or they're on a disability benefit. Again, this benefit is not going to reduce anyone else's benefit. It's independent. And then the final category of money benefits we're going to talk about is survivor's benefits. So again, the entitlement rules for this children are the same under 18, still in high school through 19, or disabled before age 22. But for surviving spouses and surviving divorced spouses, the rules are a little bit different. So surviving divorce or regular surviving spouses or surviving divorced spouses can get them as early as age 60. So 2 years earlier than a regular spousal benefit, or age 50 if disabled, and then any age again if caring for that child of a worker who is under 16 or disabled. So you might have a young spouse who has the small minor children in care, and they're getting that benefit, but again, we do have to look at their work. So that's something to think about if somebody's younger and filing. So the other difference with survivor's benefits is the percentages you can receive. So survivor's benefits at age 60, approximately 71.5%, and then going up to 100% at full retirement age. Breakdown of the differences between the two: getting off someone who's living as early as age 62, and you're going to be getting 50% or less, versus someone who's passed away, age 60 or 50 if disabled, and anywhere between 71 and 100% of that benefit off someone who's passed away. So there's a lot of times where someone might not have been eligible for a regular spousal benefit, but if the higher earner passes away first, they're then eligible for their survivor's benefit. So we need to be contacted for that survivor's benefit at that time. Survivor's benefits are also an exception to that deemed filing that we talked about. So you have some strategies involved with survivor's benefits that are not eligible to you if you were born after that January 1st to 54 day for spouse's benefits. You can take survivors at 60 and then switch to your own if it's higher anytime 62 or later, anytime it gets higher and you want to. Or you can just keep waiting all the way till 70 and let your own benefits max out. Or you can start your benefits, your own at 62 and let the survivors grow till full retirement age and then go on to the survivor's benefit. Survivor's benefits don't have delayed retirement credit, so you would switch at full retirement age in that scenario.
So can I ask a question?
Yeah.
So if you have a married couple, they're at full retirement age, one worked, one didn't, so one's getting theirs, one's getting, I guess, the spouse. If the full person died, what is that, does that surviving spouse then get what they're getting plus what the spouse got, or how does?
No, that's a good question. So they're asking if you're only on a spousal benefit, and then you're going, your spouse passes away, and so you're going to the survivor's benefit. What are you going to end up getting? You're going to go up to the survivor's rate. So you're not going to get both checks. You're just going to go up to the higher one for you. Now, if you're already on that record, the change should be automatic. So if you are established as a spouse and the surviving spouse or the person passes away, the survivor's benefits should automatically go up to that higher rate. The only time that doesn't happen is if you're an exception to deemed filing because you're born later and they want to double check if you're taking a reduced benefit, but at that point, again, we're getting out of that phase of things. So if someone's on a spousal benefit, the person passes away, we already know that you're eligible for that benefit. The computer knows it, they just kind of move it up to the higher rate. And then the other thing that'll happen is you'll be due the $255 one-time lump sum death payment if you're the current spouse on the record. So you've probably seen some life insurance commercials making fun of this $255 payment. If you watch early weekend local TV, I know I've seen several of them. It is only $255. It's been $255. I can't say this definitively. I'm guessing always. In at least 18 years, I can confirm that it's been $255. So this is payable only to the surviving spouse. It's not payable to a divorced spouse. It's not payable to an estate. It's payable to the surviving spouse or the child if they meet the criteria for monthly benefits, like being a minor child or disabled child. Not otherwise payable to an adult child. Then this other category is very uncommon, but just something to be aware of. Parents' benefits. So this would be if an adult child was providing at least half financial support to the parent and the adult child passes away first. If the parent was getting at least half their support, we can screen to see if the parent could get benefits off of that adult child record. Personally, I've never had a case of it in 18 years. Some of my coworkers have had maybe one. So it's not very common, but it is a survivor's benefit we have available. Okay, so that is the money benefits. I know there was a Medicare 101 class this morning that you may or may not attend, but I'm just going to cover basics of Medicare. Because other than the enrollment of A and B, we kind of stay out of things for the most part at Social Security to do with Medicare. But we do handle getting you into Medicare, so we'll talk about it a little bit. So Medicare Part A, your hospital insurance, that is free. There's no monthly premium if you have your 40 credits. There are deductibles if you go inpatient. That is only if you're staying overnight or longer into a hospital. So not ER visits, things like that. Part B, your medical insurance, the base premium is $164.90 a month. Some people do pay more. And then you can add on prescription drugs and you can add on supplements. Then increasingly popular is Medicare Advantage plans. Again, you're in the A and the B, but then you're adding a Medicare Advantage plan, also known as Part C. And then once you're in that Advantage plan, all of your questions and billing issues and stuff go through the Advantage plan rather than Medicare directly. And sometimes people like those because they usually have the Part D plan right alongside it, and they might have vision or dental, things that traditional Medicare doesn't cover as well.
Excuse me.
Yes.
In that Advantage plan, we've heard friends say, oh, I'm not going to take that. There's a disadvantage to it. Do they recommend the doctors or the dentist?
I don't know. So what we always tell you, Carol, where do you guys do SHIP counseling, or where's the local SHIP counselor?
SHIP counseling is through many of the hospitals.
Okay.
So for an example, Advocate does it. Sue Grosinger, who was here this
Yeah,
morning.
okay, yeah, I talked to Sue earlier.
So there's several SHIP counselors, and they're listed in our directory.
Yeah, great. So grab that directory. The SHIP counselor is who we're going to refer you to, because we don't know the ins and outs, and the SHIP counselors are trained to help you with that, and they're not working for any company. So they can help you figure out, is this a good situation for you? Maybe it's not the best situation for you. They can run through your prescriptions, the doctors you use, things like that, and they can help you navigate that. And like I said, they're not working for a specific company, so they're going to help you figure out what's best for you. And that's what I recommend, because for some people they probably are a great idea, and for others they might not need them. And the person working for the Medicare Advantage plan probably thinks everyone needs them, right? So I'm not saying one way or another. I think they're probably a great tool for a lot of people. We don't sell them. We're not in the business of them, and so that's why we refer you to those SHIP counselors for help.
Thank you.
Mm-hmm. Thanks, Carol. Okay, so skip one. Medicare eligibility, the big time we're thinking about it based on age is 65. That's the earliest you can get it based on age alone. But individuals on Social Security disability are eligible for it after 24 months of disability. And then kidney failure or end-stage renal disease, we have very specific policies. For that criteria, people do not have to be on a disability or a monthly benefit. They can get Medicare specifically related to the dialysis, transplant list, things like that. And then ALS, that is part of having to apply for disability for ALS, but they do not have the 2-year waiting period. That has been waived for ALS, for Medicare. So those are that one's pretty recent change into things, I think, within the last year or so. Now, when you can go on Medicare, the first opportunity at age 65 is your initial enrollment period, the 3 months before your birthday, the month of your 65th birthday, and the 3 months after. That's the first time you're eligible. Now, it'll feel like everyone in the world has found out you're turning 65, and you're getting all kinds of stuff in the mail, right? And so if you do not have another insurance, if you're on retiree insurance, if you're on the marketplace, or you're covered through the VA or something like that, you're going to probably want to get in during that initial enrollment period. But what those people that are mailing you things don't know is if you're still working and covered under group health insurance. And they're going to say, are you going to have a penalty if you don't get this done? Well, not necessarily, because we have those special enrollment periods. So if you're still working and covered under group health insurance through your employer, or your spouse is working and they're covering you through their employer, that is the key. Employer group health insurance and active employment together, okay? Then likely you don't need to take the Medicare, especially the Part B that costs money. What we do recommend is just check in with your benefit specialist at work, make sure that there's no reason they want you getting into Medicare, but otherwise you should be good to go. Just if you're working, keep your coverage, don't have to get into that Medicare. At the time you're stopping work and losing that coverage, even if you're going to a retiree insurance, you need to get into the Medicare then, but you're going to have that special enrollment period. Now that last enrollment period, it's not going to apply to any of you because you're all listening to me very well today, I know. But this is if you did not take it when you turned 65. You just said, I'm not paying for insurance, I'm never sick, I don't need this, that kind of thing. And then something happens, and you're like, oops, I need that insurance. Unfortunately, you have to wait for the general enrollment period if you don't have that special enrollment period. That's January through March of every year, and you have a 10% penalty onto the monthly premium for every year you did not take the coverage. And that goes on until you pass away, unfortunately. That penalty stays with you. So that's why it's important. You might not need the Medicare yet at 65, but don't stick your head in the sand. Just make sure you did your research and make sure you're ready for that, okay? So as far as when your coverage starts, within your initial enrollment period, if you do it the 3 months before you turn 65, you have it the first day of the month in which you're 65. One thing I should also say here, if you're already receiving a Social Security check prior to age 65, you will automatically be enrolled in A and B. You don't have to do the work to get put in it. You just have to look into whether you need your prescriptions or anything else. But A and B will be automatic. But if you're not on a check, you do need to file if you need it at 65. It'll start right away the month of your birthday. If you wait till the month of your birthday or the 3 months after to contact us to get that Medicare, it's going to start the first day of the month after you sign up. So it'll be delayed a little bit. Your GEP, your general enrollment period. This just changed in 2023. It used to be you didn't get it until July after the general enrollment period, but now you get it the first day of the month after you sign up. That's new in 2023, so that makes it a little bit better because a lot of people, they'd sign up as soon as they could in January once they missed it and still have to wait 6 more months for insurance, but at least you can get it right away. Those penalties are still there though. Then special enrollment period, it's if you're still working or in the first full month after you stop working, you could say, I want it right away or I want it in the next 3 months. But if you wait to any of the remaining 7 months, it's always going to be the first day of the month after. So, again, if you need it right away, get that paperwork in before you stop work or right away. I did talk about our base premium being $164.90 a month. There are people who pay more than $164.90 a month, and it has to do with your modified adjusted gross income. And at Social Security, we don't know what your modified adjusted gross income is. The IRS does. So what actually happens is this letter will come in the mail a little bit after we process you onto Medicare if this is something that applies to you. It's called IRMA, or Income Related Monthly Adjustment. And what's happening is they're looking at 2 years prior modified adjusted gross income. So in 2023, they're looking at your 2021s to determine if you're going to have these additional Part B and Part D premiums. If the situation applies to you, you'll get a letter in the mail that's several pages long. It'll explain everything to you, and it'll also tell you there are situations that we can use a different estimated tax year, maybe the estimated tax year for this year or last year, and that's if you have a life-changing event. And it'll list them all down for you, but I'll just cover one of the most common life-changing events at this age is work stoppage. So if in 2021 you were still working full-time and now you're retired and your retirement income is lower than your working income was, you can say, hey, I'd like you to use an estimate of this year's income. And there's a form that it'll tell you about in your letter that you can get. You can find it online and you can send it into the local office, and they can ask you, they might ask you for a letter confirming from your employer, confirming you stopped work. There are other life-changing events. They'll be all listed there, like I said, but that's just the most common. Now, there'll be other situations that just cause you to have a higher Medicare premium for a year. So something else that people do a lot at a certain age is maybe sell their home because they're downsizing. That will count toward your modified adjusted gross income. So if you sold a home in 2021, it's going to be higher in 2023, but guess what? The following year, if you didn't have anything extra, it's going to go back down because we're using the next year's. So that's a one-time event. I had a guy have a really good year in Vegas. He did not have that earnings any longer. He had gone back to Vegas since and didn't have them in his pocket anymore. But unfortunately, that wasn't a life-changing event by our definition. So he had a higher year. It's probably a life-changing event if I won 80 grand, but it sounded like something he might be a little more accustomed to on and off. So anyway, I told him, I'm sorry, we have to use that for this year. Next year, if you had a bad year the following year in Vegas, I'm sorry, but at least your Medicare's going back down then the next year, right? So there's situations you'll continually have it high if you're just naturally in one of those higher income brackets. There's situations that could be high for 1 year, and there's some that we can actually adjust because you had a situation change in your life.
Does it automatically go back down?
Yeah, because it's always using 2 years prior. So the only time you need to use one of those forms is if you had that life-changing event. Otherwise, if it's something you're just having to wait out, then next year, in 2024, we'll be using 2022. So if you didn't have that situation, it'll go back down.
And it's automatic?
Automatically, yep.
Thank you.
So you can do Medicare only online. You can also, if you already have that Part A, but you're not taking the Part B yet and you're ready for the special enrollment period, you can now do that online as well. You can get the forms for the special enrollment period right on the socialsecurity.gov website. The 40B form, that's the one that says, I'm ready for my Part B to start. And then the CMS 564, that's the one that your or your spouse's employer fills out. And they'll be labeled, so, and then you just submit those together to your local office. Or you can mail them or fax them or complete them online. Medicare.gov has their own website, so you'll notice the .gov, that's the important thing when you're going to our website, when you're going to Medicare, when you're going to IRS, .gov. So not, we're never a .com, we're never a .org. And there are .coms and .orgs that are out there trying to get your money. So just be really careful to always use that, but otherwise our websites are good tools. So you can go on Medicare, create an account with them, get your bills figured out, things like that. Those ship counselors I mentioned, like Carol said, there are local ones. If you're having problems finding them, you can go online for a locator. But there are a lot of local ones. I'm sure there's plenty of them here today. Like she mentioned, Sue, she stopped by my table. I know they're around. So you can find out where they are today and have that information ready for when you need them. But like I said, they're going to go through questions. They can go through Medicare billing issues with you, coverage issues, Part C, Part D, all that stuff that we can't help you with at Social Security. As far as how to file for benefits with us, the easiest way, if it's disability, retirement, or spouse's benefits, or Medicare, those are all online. But if it's survivor's application, that's not available online at this time, so you need to call us for that to set up an appointment. Or if you're just not wanting to file online, you can call and set up an appointment. You can call our 800 number and they'll schedule you a phone appointment with the local office most times. Or they'll send you to our claims taking unit and they'll just take care of you right away. If you need an in-office appointment, these are pretty rare, that situations where we do in-office appointments. I'll tell you one of the reasons is a lot of our busier offices don't have much appointment availability. So out in Peru, we sometimes are taking applications for 3 other offices. Well, obviously that's not easy to do if it's an in-office appointment. But if it's a phone appointment, we can move our work around as we need to help kind of everyone out. So that's one of the reasons why we're really using phone appointments a lot. But if someone just absolutely doesn't have a phone, cannot do the phone appointment, then they can, ask for accommodations in office. Here's our SSA.gov website. If you went on it a while back, you'll notice it looks differently, but this is what our homepage looks like. And it's pretty easy to navigate. We have the benefits tab. You can search anything, preparing, applying for, that's all right up there. And then toward the bottom, if you were to scroll, you can go jump around to different sections, different information for people. So if you've not been on it, you might want to spend some time checking it out, just looking through all the different resources. We have a lot of online calculators. So let's say you are that situation where you have 40 credits, but you also were a teacher for a while in Illinois, or worked for City of Chicago, or some other job where you did not pay to Social Security. If you have your 40 credits and you have that non-covered pension, you have what we call windfall elimination provision, or WEP. There is a calculator, a WEP calculator, where you can get a revised benefit estimate. We also have a retirement estimator behind the My Social Security account that's really nice. So first, we want everyone to set up a My Social Security account. Does anyone here have their account set up? Okay. I do. We're doing woo-hoo. Gold stars for the ones with hands up. And you have a chance to earn a gold star if you go home and create yours still. There's still a chance, okay? So hope is not lost for it. We recommend that everyone over the age of 18 creates one of these accounts. So it's not just something to think about just because you're getting close. You want to do it early. If you haven't got it done yet, get it taken care of, and go right to our site and sign in and create an account. It'll have you hit create an account, I think 3 times. If you don't have one yet, you're going to feel like, okay, I already said I want to do this. Just keep going through it. And then if you are doing it through our site, it's going to have you set up through login.gov and then bring you back to finish setting up your account. Now, if you have an existing login.gov account, then it'll just take you to log in that way and then still finish. Or if you have an ID.me account, now some people have one of these, somebody said they had set them up for IRS, a lot of veterans have them, then you can just log in directly with that ID.me account and get your My Social Security. So there's a few ways of doing this. If you're doing it from first time, you're going to get an activation code to finish registering after you've gone through the login.gov, and then you'll be all set. So if you're on benefits, there's a lot of things you can do with these accounts. You can opt out of mail notices if you want. You can report wages, get proof of income. If someone says, I need an award letter, maybe you're helping someone else, and they always say, I need an award letter. We call that a benefit verification, that proof of income. A lot of agencies request it. You can print it right from this online account and not have to wait. You can change your address, phone number, direct deposit, get a replacement Medicare card, and get proof of your Medicare for your doctor's appointment that day. We send one-time $99 out a year, but if you misplace it, you can replace it right there online. Even if you're not on benefits, you can, if you have a valid driver's license or state ID, you can generally replace your Social Security card right online. So that saves a visit to the office. And then review your earnings record once a year. Make sure everything's posted correctly. It's not super common, but occasionally there's a year missing. And so you can just bring the W-2 and get that corrected. Now, if it was 20 years ago, because you never checked your earnings record, it's going to be a little harder to find that W-2. So that's why we want people to do this early, and then get your estimates to be prepared for the future. And then, like I said, there's a retirement estimator here where you can change, oh, I'm going to stop working, or I'm going to start making more money, and see how to adjust your estimates. This is what the Social Security statement looks like now. If you are 60 or older and do not have an online account, is the only time we mail these statements. But if you like the paper statement and you have the online account, you'll see that it's available there. You can save it to your computer, you can print it, you can do whatever you like with it if you still like having that copy. And it doesn't break down year to year your earnings record anymore though, like it used to, so that's why you want to get that look in the account, because that still does. We also added some fact sheets that might be relevant to you, so you can find those in your account as well. If you want to help someone set up an online account, they must be with you, and they must be able to answer the questions. I am my parents' tech support, so I understand. If someone needs help, that's fine. I helped my parents, but they were with me, they were answering everything. I was just making it so they didn't lose their mind on the tech, right? And that's perfectly fine. But you cannot do it for someone. You should not say, oh, I got this, and you have their username and their password, and they don't even know what's going on. And I know that happens a lot, because I have a lot of surprised people when I tell them they already have an online account, and then they'll be, oh, maybe my daughter did this, or maybe my son did it. So, no, make sure they're with you, that they have an awareness of what's going on. If you need help, something's going wrong, you can go in and get an activation code with a form of identification to your local office to help finish up. And then anytime we have a captive audience, we always like to remind everyone, I do have these posters, they're like 8.5 by 11, just regular sheet size posters in English and Spanish at my booth. If you are somebody, you have a bulletin board, come grab one, stick them up. Help us get this word out on these scam calls. I've had somebody tell me their parent still has a home phone and they taped it right next to the home phone to remind them when they're answering the phone. Do not give out Social Security number. Know that we never suspend a Social Security number. That's not something that exists. We aren't going to threaten people. If someone's threatening you, call and complain to management if they're actually a Social Security employee, because no one should be that mean. No one threatens you, demands immediate payment. So just always hang up and do not give up personal information. If you have time, report the scam to oig.ssa.gov. And that's just a way they're trying to track some of these scam calls if you have time. We are on social media if you're someone who enjoys that. We are on Facebook, Instagram, LinkedIn, YouTube, I guess X, aka Twitter. Yes.
Quick question. The previous slide about not having to reveal your Social Security number. I know in years gone by, doctors' offices, dentists, and all that aren't supposed to ask, quote unquote, for your Social Security number. They're supposed to get another number, your benefits number, or whatever.
Mm-hmm.
What happens if the government is still demanding a Social Security number in order to identify you as a person, a full Social Security number?
I'm not sure. I mean, there could be. Yeah. I mean, there's always situations that some people might say. Like some people call us and we need it, but they've called us and then they'll be like, well, I don't want to give that out. Well, it's hard to find a record of that. So there's but if you're the one supplying it to a known party and it's not a private party, the government, unfortunately, is still like Medicare has gotten away from that, and maybe we will get eventually away from. Honestly, who knows if they'll maybe eventually get away from using social security numbers for the actual, all the other things they're using for, like credit and all that stuff. But there are select few that are going to ask for it, or select few times where they're allowed to ask for it. But there are a lot of times also, like you mentioned, that they aren't necessarily needing it if they're not sure they would.
Anytime you want to like renew a prescription, okay, what's your name, what's your address, what's your full social security number, and like.
No, I mean, you should have a prescription number. I mean, I've never had to give my social security number to renew a prescription.
Oh,
So.
well, I know, so it's like, okay, so you say, and then you complain to them all the time, it's like, oh, I can't do anything about it, so you do everything online, so you don't have to.
Yeah. Yes.
To answer that, a lot of places ask for it that have no legitimate reason for it, and the best answer I've come up with for myself is, I don't remember it. or better yet, I haven't seen that card for 20 years, which is true. I do remember it, but I haven't seen it.
Yeah, that's not a lie. If you don't look at it, then it's not a lie, right?
And they say, well, get it to me later, and then later never happens.
Yeah, in fact.
Oh, good idea.
Can I go back to that divorce benefit, the divorced spouse?
Mm-hmm.
Because I didn't realize that a divorced spouse could collect the benefit. That's not a survivor benefit, that is an eligibility benefit.
It's a benefit either to a divorced spouse that's off a living person or a survivor, but again, depending on when they were born, we're going to look at their own first before looking at the divorced spouse
So
benefit.
it's never going to take a spouse or a divorced spouse beyond their individual benefit? Or is that not right?
That's when they would be eligible for it. Is if 100% of their own is less than 50% of the divorced spouses is when we would pay that. Same as a current spouse.
Otherwise. it's
Right.
fine.
Mhm.
Thank you.
Yeah.
So my sister spent her whole career as a teacher, and so she paid into this pension system. I don't understand.
Teacher's retirement system,
But
yeah.
it's not Social Security. So she just retired, and she just got a part-time job, wherever it is. And now they're taking out Social Security. Now it's part-time, and it's probably insignificant, but she's not even familiar with any of that. So she'll still be able to collect it whenever.
If she gets
wants.
40 credits.
So that's the thing. What if she doesn't? Is she paying into Social Security and might never see it?
Welcome
Yeah,
to the United States of America.
That's not the trust thing. We're all paying in the trust fund. So I'm not married. I don't have any children. If something happens to me tomorrow, I paid into it for 25 years and I never get out of it. It's just different than a private system. It's a trust fund. We're all participating in that pay our FICA taxes. Yes.
Well, that would be, the windfall will.
If she has 40 credits, yes. But you have to have at least 40 to even have windfall apply. You have to have your 40 credits to get anything on your own record. Yes.
Megan, thank you very much, and thank you for all of your questions.